Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we are talking about one of the largest gas supply companies in Europe. We're actually talking about Snam in Italy. So let's go ahead and begin in today with the daily stock analysis. Thanks for joining me today. If this is your first time, make sure that you subscribe because I come to you on a regular basis, almost every day, with great information about stocks and how that you're able to use this information to develop an investment strategy that'll help you get to the goals that you have in your life. So today I want to begin, and the very first thing that I want to do is I want to say thank you to our sponsor. Our sponsor today, our first one, we have two sponsors. Our first one is Richards Financial Planning, and Richards Financial Planning is my firm, but it can help you to develop a strategy towards accumulating assets, distributing assets, estate planning. If you're in Texas, go over to richardsfinancialplanning.com and learn more about the prosperous planning process. I think that it's something that you'll be well rewarded for. So let's begin and talk just a little bit more about Snam. This is a company that not maybe a lot of people are familiar with. If you're in Italy, I know we have some fans that listen to us in Europe. If you're in Italy, you may be familiar with Snam, but the company is an Italian gas supply company. Let's go ahead and dig into how the company is structured and talk a little bit more about what they do in essence. Snam really is a natural gas management and development company. They have gas systems, they have infrastructure systems that they are actually developing, as well as gas services as well. The company is really segmented into three segments. They have transportation, regasification from LNG, and storage. Snam owns the majority of the gas infrastructure in Italy, and the company right now is worth about $17.49 billion. They had a great day on the market. It was up 2.03%, and they finished out at $10.68 per share. But as we look at this stock, I always encourage you to use this formula, this recipe. I call it SEC, and what it stands for is stability, earnings, and competitiveness. And the way that we begin digging into this is by looking at the moat that the company has. Now, the moat is the invisible barrier that's between that company and their competitors. It's been made really popular by Warren Buffett, and I think that this is the basis of beginning to look at the stability of a company. Look at how stable they are from the standpoint of an ongoing operation. There's 3 points I want to bring up as far as this company's moat and what sets them apart from competitors. Number one is the infrastructure that they have is very difficult to replicate. It's a natural gas distribution and transmission company. That network of pipes and the systems and the development that they have is almost impossible to replicate. I call it a narrow moat. You could even call it a wide moat if you want to. Their service territory is really, it's a monopoly because it is regulated by the country, by the government, and actually the Eurozone has some emphasis on it as well. So the service territory is really a monopoly, and the government does set the rate. So that in itself offers a lot of stability to the company. But how much money are they making? What are their revenues? So I went back just to the 9-month period that was reportable from January until November. And when I look at that, actually it's the end of September, beginning of November. I'm going to look at 2019 and I'm going to look at 2020 because that's the most recent one. They don't have another earnings report that's going to come out, I believe, until about March. They're a little different than U.S. companies, although they do adhere to GAAP or generally accepted accounting principles. Their operations are just a little bit different. The company in 2019 had $2.3 billion, actually it's $2.374 billion in revenue. And in 2020, that was up to $2.467 billion. That's a 3.9% increase. That's pretty good. Now, when we look at that from a net profit, when you get revenues, the revenue is basically the money that's going into the till at the front of the store. That's my analogy. But you got to pay people. You have to pay revenue. You have to pay for those revenues. You have to pay expenses. You have to pay cost, all that. So we have to go back and look at what the net profit is. That's the profit that is after the earnings. In 2019, their net profit was $1.05 billion. Now, I want to emphasize also that I've converted all this from euros to dollars, and it's based on today's valuation at about noon. So there's going to be a little difference in there. If you look this up, it's going to have earnings that are going to be reported in euros rather than in dollars. But in 2020, they ended at about 1.06 billion. It's up a little bit, 0.7%. It's not really that big. But the thing that I want to look at really is the earnings. Remember, we looked at the stability and I talked about the Moat characteristics. Now I'm going to look at what the earnings are doing. And if I go all the way back to 2017 and start looking at quarterly earnings, they've been around 16 cents a share every single quarter. If you're looking at the chart that I put up on the screen, and if you're just listening to this, I'm going to describe it to you. If you go from 2017 to actually 2017 through to 2015, and I look at some of these numbers, they're actually in reverse from this standpoint. But I'm going to say that it's been around 22 cents to 16 cents. If you take out some of the high points, the anomalies, you can see that it's actually been right around 16 cents per share. And if we go back, we can see that it's actually helped the dividend significantly. Now, look, I love dividends. I think that dividends offer a significant benefit. The dividend is really what makes this company stand apart. And the way that I look at that is that if you're looking for dividends, you want to make sure that you have stable earnings. And this company has a dividend of 4.67% right now. And if I go... Jeez. Sorry, folks, I hit the button twice that time, but I'm going to go ahead and what I want to do is move forward. I want to look at historically what the dividends have been. Now, I'm going to go back to 2014, and they were paying a 4.16% dividend. 2015, it was 3.69, and they had a big bump in 2016 and 2017. I think that's more of an anomaly. That's not something that you could depend upon. 2018, it was at 5.8. 2019, it was at 4.79. And remember, currently, it's at 4.67%. Their dividends are really very significant. Now, dividends are not guaranteed, but that brings me to the second sponsor of today, which does offer you guarantees. My second sponsor today is not Richard's Financial Planning, but it's adviceforlifeinsurance.com. You can find the best life insurance at the lowest prices in less than 5 minutes at adviceforlifeinsurance.com. All right. Let's look at the bulls and the bears. Now, some of this stuff I had to derive out because there's no analysts that are looking at this right now in the United States, or very few of them. We'll talk about one of them that's talking about it in a few moments. But a bullish sentiment that is existing on this company, we've talked about a little bit. Italy is becoming the gas storage hub of Europe. And the biggest reason for that is that it's to reduce the dependence on Russian gas supplies. So a lot of Europe is turning to Italy as a supply station, a storage place for gas for the whole country. And if we look at Snam, that's actually what Snam is doing. And the pipeline development is actually reducing the entire continent's dependence upon Russian gas. And that's really important. A fourth thing is that this company is highly regulated. Now, just the fact that it is highly regulated gives it a high debt rating. So its quality is quite significant. Now, that could be considered a bearish aspect too when we talk about the bearish points that go into looking at a stock. And the same thing would pertain to this company. It is a regulated industry, and since it is a regulated industry, that means that there are limits on the profits. Another thing that could limit their profits is the fact that they're making a big push towards renewable energy. And yes, I agree that's an important thing to do. But if we're looking at it from a corporate standpoint on the bottom line, when they put a lot of investment in it, there's not a lot of money, profits that's coming out of it from that standpoint. That brings me to the third point, which is that investments into low return renewable industries actually drains profits. So consider that when you're looking at this company for the future. You have to weigh which is going to be more significant, the bullish sentiments or the bearish sentiments. Now, when I look at the valuation of this company, as I mentioned, there's not a lot of analysts. There's hardly any analysts that are really looking at this stock. So when I go to a company like Morningstar and I'm trying to find out what they're saying that the fair market value is, all I get is what their algorithm spits out for me. So if I look at the current price, which is around 1068, they're saying that the value, their algorithm is saying that the value of this stock is really at about $10.29 per share. They would rate that as a 3-star stock. Remember, the star system is not like, Michelin stars you're eating at a 4-star restaurant. It means it's valued fairly. That's what a 3-star stock is. If it's going to be a 5-star stock, it's going to be significantly undervalued. If it's a 1-star stock, that doesn't mean it's a bad stock. You're going to have a company like Tesla that's actually a 1-star stock. And the reason is because it's overvalued. But right now, the algorithm for Morningstar is pegging this at 1029, so that's close to 4% as being overvalued. Now, there's not a lot of analysts that are looking at this stock. So what I wanted to do is I wanted to go back and see what the algorithm did in past years. If I go back all the way to 2012, it shows me that on a regular basis, it is almost always right with the fair value. It's stable. The reason I think that it's stable is because it's a regulated industry. If you have a regulated industry, it's just basically like a government industry, really. It may be privatized and you can buy stock in it, but it's regulated. The government tells them exactly what to do and when to do it. Now, there are no price targets, so you have to be a person that uses your own best judgment. If you think that this is a stock that's going to be one that you want to invest in, ask yourself, is $10.68 going to be a fair price? I personally think that it is. And when I went through and looked for information on stocks, the reason why that I picked this particular one was that a lot of you have asked me to review European stocks, and I want to help you out from that standpoint. So that's why I picked Snam. The reason why I picked Snam was because there was an article that came out over the weekend in Barron's that's called 28 Investment Ideas from Barron's Roundtable Experts to Beat the Market This Year. And that's just from January 22nd of this year. And this is one of the picks from an analyst from Ariel Investments. And her name is Rupal Bensali, or Bonsali. Hopefully I'm pronouncing that right. This was actually her number one pick. And I think that it's got a lot of merit to it when you look at something that is going to be a stable stock going forward. It's had stable earnings. It has a stable history. It's government regulated. So it's a pretty stable company. Let's look actually at what's happened to the price. If we go back in the Wayback Machine, a year, the price was at $10.06, just a little bit more than that. Of course, right after the pandemic crash, if you were brave enough to invest in this stock, you would have made a pretty good return, but it's made a pretty good climb back. If we look at what's happened up until now, I pegged it at 1067 when I did this at lunchtime. So it's had a 6.03% gain just in the value. But remember also, friends, that gain is separate from the dividends. So if you're getting a 4.67% dividend and you've had a 6% gain in value, you're over a 10% gain. But always remember, the past performance is never going to be a guarantee of the future results. Now, I want to draw back a little bit more. If we go back 3 years and look at this from 2018, it was actually selling at about $8.77, just a little bit more, but really $8.77 a share. And when we compare that to what it closed at today, around 1067, 1068, That is a total gain in 3 years of 21.61%. That's an APR, that's annual percentage rate return, of 6.74%. So it's very steady in its return. It's very steady in its dividend as well. And remember that the return is in addition to the dividend. And I can't overlook this at all, but the past performance is never going to be a guarantee of what the future results are. Now, what are some of the companies that compete with this company, with Snam? If you look at all the different gas distribution companies, there's several of them, but I don't want to just focus on what's in the United States since we're talking about a company that's actually in Europe. Snam is the blue line that I put on the spaghetti graph that's on the screen in front of you if you're watching. If you're listening, you can see actually what's happened over the past year. You can see how the returns have come out. The closest company to it actually is a Canadian company, and I've reviewed this one just about a week or so ago, is Enbridge. Enbridge is in the negative territory, but I'd say it's probably the closest one to it. As far as a company that is in Italy, Eni, I hope I'm pronouncing that right, ENI is probably the closest one, but that company's down about 25% over the past year. And then domestically, we look at Kinder Morgan in the United States and also Plains All American. And both of those companies are in negative territory. Actually, Plains All American is down close to 40%. So I would think that Snam is a significant buy at this point in time. And I think that Miss Bansali with Ariel picked a great stock to talk about. But remember, friends, we're talking about the stability, the earnings, and the competitiveness of the different stocks. And if you look for these three things, you're going to have success in picking investments, and you're going to have a good probability of finding investments that fit your preferences on what you're looking for. Now, there's no perfect investment, and I encourage you to either, if you're watching, I'm going to show you a disclosure in just a minute. There are limitations to the information that I provide for you, and if you're listening to this on the podcast, just keep listening for the disclosure. But that's all for today. That was a really short one. I hope it helped you out a little bit. If you just tuned in, go back and look at some of the information on Snam, and please continue to give me your ideas. This was one of the ideas from you all, and I know that we have people that listen to my program from all over the world. So if you're in Italy or Europe or some other country and you have a stock that you would like me to look at, list it into the comments and I'll take a look at it. I can't get to all of them because it would take me about 20 years to cover every stock that exists, but keep listing. You might hear them all. All right, friends. Thanks a lot and stay tuned for the disclosure. Have a good evening and I'll talk to you tomorrow.